7:38, time to focus on business. Business editor Mike Eppel joining us now. Good morning, Mike. We're talking oil prices today.
Yes, indeed, Ted. We're back from a three-day weekend for Canadian investors, and the price for oil back in the spotlight again. It's actually down for a fifth day in a row, including yesterday's New York trade. The price for crude is back down to about $58 a barrel. It was a week ago today. It peaked at 62 and change. But what's happened since then? Well, U.S. refineries have not been buying as much oil to convert to gasoline. And then today we've got Goldman Sachs. Goldman Sachs is a Wall Street brokerage that is not averse to making predictions, even when past predictions have not necessarily happened or come to fruition on the actual price targets. Goldman figures that oil will drop to about $45 per barrel between now and October, and between now and 2020, yes, 5 years, an average price around $55 per barrel. So they do not see this oversupply in the market being solved anytime soon. Now, back in 2007, they also predicted oil hitting $200 per barrel. That didn't happen. And a couple of years back, they figured oil would spike, and it fell, and then it was all over the map. So take these predictions as they are, but nevertheless, oil this morning down for a fifth day in a row. That is weighing on the Toronto stock market to start the trading day, combined with the fact the Canadian dollar is down sharply in reaction to the fall off in oil and a suddenly stronger U.S. dollar once again. Now, we got some inflation figures out of the UK today. British inflation at the lowest level since 1960. It was negative for April, and that is reflecting the low price for oil and gasoline. And this is what we're hearing from all of these central banks. Canadian and U.S. inflation numbers due in later this week will also reflect a very low cost of living scenario. Walmart and Home Depot in with earnings this morning, and the Home Depot number is interesting because they show that Americans specifically are spending a lot on home improvement retailing spending as the real estate values rise a little bit in the States. Home Depot made $1.5 billion in the first quarter. Walmart was hit by the U.S. dollar strength in overseas markets for Walmart. We've talked a lot about how big multinational U.S. companies are being hit by that. And somebody somewhere is making some cash, even though we have seen the price for pork on international and commodity markets fall off a little bit here over the past several trading weeks, because last year there was a shortage of pork because of a virus in the herd, specifically in the United States. But pork prices have not come down. In fact, they've gone up at Canadian retail grocery stores, and beef prices were very much higher than they are from a year ago, up 20% in some cases. So this past weekend, if you fired up the barbecue, it cost a heck of a lot to put a nice pork cutlet and or hamburger on the grill, didn't it? So nice. It is the holiday weekends, lots of fun, but it's almost getting more expensive to celebrate them, isn't it?
Yeah, no kidding. All right, thank you, Mike. That's our business editor Mike Eppel reporting this morning. You can hear Mike on 660 News at 26 and 56 after the hour.
BT's Market Report is brought to you by 660 News.
That's your news to 7.